Hi all, and welcome to our 2022 Outlook webinar for grains. My name is Alef. I'm a grains and oilseeds and macroeconomics analyst here at Hedgepoint. With me, I have Pedro.
Hello guys, I'm Pedro Schicchi. I'm also a grains and oilseeds analyst, but also cover livestock. I'll be happy to join you guys today.
And we'll be also joined by Sol Arcidiacono, our head of the Latam Grains desk. Without further ado, let's kick off our presentation. Here, we have a quick summary of the topics we'll be covering in our presentation. On soybeans and corn, these are the countries we'll be focusing on. In the US, the focus is on demand, as the domestic crush market will likely benefit from a low meal output in Argentina. Talking about our neighbors, Argentina will have a smaller soybean and corn output due to the dry weather witnessed in the last few months. The same goes for Brazil, but the country will still be able to export a significant amount of beans. On the demand side, China's pork production resumes, demanding more imports of raw grains and less meat. For wheat, we'll be talking about two of the main producing countries, the US and Russia. Both countries are expected to produce more wheat after the failures in the 21-22 season. However, some of the risks to this output must be watched. We'll be starting with China on the demand side. And firstly, we'll be covering the macroeconomics of China. China is starting to shift its economic policies to a more expansionist approach, which should speed up the country's economic growth and, consequently, raise their demand for commodities in general. As we can see on the charts, the country's credit impulse is picking up again, and the short-term rates have been reduced recently. With a better economic performance in the Asian giant, combined with relevant interest rate differentials in relevant emerging markets, their currencies should keep strengthening in 2022. This movement is being reflected on the Bloomberg Commodity Index, Emerging Markets Currency Index, and on the speculators' position on commodities, which are all coming up in 2022. And now we'll be going to the macroeconomics with Pedro.
Thanks, Alef. So guys, moving away from the macroeconomics, when it comes to actual soybean demand, the post-African swine fever recovery has led to herd numbers, to high herd numbers and high slaughter rates in China. In turn, this has provided the basis for a strong forecast of feed ingredients demand, like corn and beans. And as a result, the crush margins have found support on these factors, especially over the last few months actually. However, these same high slaughter rates have also been pressuring the pork prices as of recently, and therefore the pig producers' margin has significantly decreased since late 2021. As a result, the herd in China has finally stopped growing, which is the gray area here in the left-hand chart. The herd has stopped growing as it was more than enough to supply the demand. And for this reason, the margin for pig producers in the country has been oscillating between negative and slightly positive in the past few months. In the short term, the number of pigs being fed is still huge, and this is supportive of feed demand. However, in the mid to long term, if the margins continue at this poor level, the herd will likely have to be adjusted downwards to balance out demand. And this could mean loss of support for feed consumption. Additionally, with the recent news regarding Brazilian crop, soybeans have rallied, and when combined with this potential weakness in the pork market, it could hurt margins, crush margins going forward. Again, all else equal, the huge herd of hogs being fed in China means that more corn and soybeans will be needed for feed, and less meat will be imported from other countries. For Brazil and US, this means more exports of raw grains and less exports of meat, consequently leading to lower demand of feed ingredients. However, the key here is all else equal, and this is not the case this year. As we pointed out in the last slide, some trends that threaten to hurt the Chinese demand for feed are beginning to appear. And on top of them, China has also achieved bigger production of corn in this cycle, which is limiting their appetite for corn imports. Now, One side of the question is the Chinese appetite that we have been discussing. The other side of it is who will supply this demand? Of course, the crop failure in South America plays a huge part in it, and Alef will discuss it further in just a moment. But we have 2 points here that we like to highlight. First is the fact that by the end of 2021, Brazil had a much more comfortable carryover than it did by the end of 2020. And with equally, if not more devalued currency. As such, it was able to start the exporting season earlier and with higher volumes despite the prospects of failure. Second is that in the early 2021, there was much more pressure onto China to fulfill their phase one deal. And although there is some pressure still today, it is not nearly as much as it was in early last year. As such, Brazil has some competitive advantages, but may not have the availability of product to fulfill this demand. And it is to discuss exactly that I'll pass back to Alef to continue with the prospects to South America.
Thanks, Pedro. So now talking about South America, we need to start with soybeans. Soybeans in Brazil and Argentina suffered a lot with the dry weather in the last few months, and that led yields estimates to fall dramatically. Compared to the last crop, we're talking about a reduction of almost 16 million metric tons in the output of the countries combined. As we can see on the left side chart, the drought in South America impacted some of the key soybean producing regions in the continent. Looking at the forecast for the next months, we can't expect the situation to improve until the end of the crop. In Brazil, the impact is focused in the south, which accounts for around 30% of Brazilian soybeans and 20% of corn. And it is astonishing how conditions deteriorated quickly. On the right, we can see that the impact in Argentina was less intense, and optimal and adequate hydric conditions for soybeans are already above the 5-year minimum. The crop is entering critical stages, both in Brazil and Argentina. But as we have shown, the outlook for rains shows no sign of improvement, so we can't expect the output to be much better than what is currently forecasted. Now going more to the demand, Brazilian farmer selling is slower, as producers have sold only about 36% prior to the harvest, and that is likely due to the crop failure. It is generally accepted that 30% is enough to cover most costs, so pre-harvest sales are in line with what is expected. So producers may be waiting for better prices and more certainty on the crop output to sell more. So, as we saw, both Brazil and Argentina are having a tough time in this cycle. At level that we are currently forecast Argentina production, that is 42 million metric tons, so the crush would fall to about 38 million metric tons. But even that is still a challenging level for the industry. As such, Argentina will not be able to export as much meal and oil as it would normally, and even in the USDA's current scenario. So, remember we said earlier on that China's smaller need of meat imports would remove some of the meal demand in US and Brazil. This scenario in Argentina offsets that effect and export crush margins to Brazil and US. This is already visible by the Brazilian lineup of meal. Last year was already a strong one, and the expected shipments are even larger in the first quarter of 2022. However, soybeans are also off to a good start. So, despite the much lower level of production than expected at first, we still see high shipments in the first months of the crops. But it will be on the second half of the year, when availability gets lower, that we'll see who will get the upper hand here. If Chinese demand continues strong, we might see the export market bidding these soybeans up. On the other hand, if the risks that we pointed out materialize, the domestic crush might be able to hold more soybeans in the country to export as meal. The domestic market in Brazil, on the other hand, will likely suffer the effects that smaller import demand from China, and we expect less feed demand for both corn and soy meal. Additionally, The biodiesel mandates for 2022 were cut to B10 after a lot of controversy throughout 2021, removing a key portion of soy oil demand which had, until then, led the crush margins. Oil share is still pretty high, but a good chunk of expected demand was lost in this move. That all being said, we expect a scenario of tight soybean balance for Brazil in 2022, with a stock-to-use ratio close to what we had in the 1920 season. For corn, even with the recovery in the production after the failure in the previous crop, external demand should not allow much looser stocks for 2022. Until now, the impact of the dry weather has been much smaller when compared to soybeans, as only the first crop has been affected until now. With the smaller soybean output, Argentina will also face tighter stocks, which will lead to less meal and oil available to be exported. With that, we conclude the scenario for South America, and I'll hand over to Pedro that will bring us the outlook for the US.
Okay, thanks once again, Alef. Okay, guys, so US is obviously in a very different moment of its cycle than South America. On the one hand, we are still concerning ourselves with the demand side of the balance on the current cycle. On the other, we are also starting to eye the new crop, and we have some prospects to share on this matter too. So, starting with the new crop prospects. Up until recently, the margins leaned more favorably to corn, as we see on the left-hand chart. With all the issues driving fertilizer prices up, corn prices were expected to suffer more than soybeans, but so far in the season, the traditional November soy over December corn ratio has leaned a lot in favor of corn, offsetting the effect of the increased costs in the margin. However, this is all changing as of recently. With the developments in South America, soybean prices rallied, and the ratio returned to a much more normal range. This would favor soybeans in the current scenario. The latest baseline numbers point to soybeans share of acreage growing slightly in relation to the past year, which we think is in fact appropriate for the current scenario. In any case, by the end of March, we will have the planting intentions report, which will confirm or not our expectations. In terms of weather, precipitation is expected close to normal in most of the key regions during the critical months, with some exceptions here in Iowa and Illinois. But of course, long-term forecasts must be seen with caution, as there's a lot of error built into them. So, all in all, production forecasts for US's 22-23 crop look fairly normal, with slight growth projected for both soybeans and corn. However, we must highlight that we do see more risk built into the corn forecast than into the soybean one. And this has two reasons. One is that the corn projection counts on record yields, while on soybeans the yield is much more reasonable. And two is that with the extension of the crop failure in Brazil especially, but also Argentina, increasing, we might see US farmers turning more to soybeans this year. Okay, so with the new crop prospects settled, we move back to the outlook for the current cycle, 21-22. As US is already in the second half of its crop, demand is the primary concern rather than supply. Mainly how the issues in South America can affect US exports. We brought two main drivers here to analyze this issue: production in competing origins and imports from the top importer, which is China in both cases. For corn, the scenario is simple. All things align to for extraordinary exports in 2021, small production in competing exporters, and very high demand from China, combined with the pressure from the trade deal. These factors aren't present in the current crop, or at least not in the same intensity, so we do see some weakness in US corn exports. On soybeans, the competing exporters' production will end up at very low levels, even more than the USDA currently predicts. However, not all of this 10 million ton cut to production that we are forecasting are soybeans that would be available to be exported otherwise. the cut to Argentine production actually removes product from the meal market, as Alef pointed out, favoring the crush industry in US and Brazil. And on this matter, we believe that the domestic market in the US is more capable of beating up the beans to keep them in the country than in Brazil. The very weak Brazilian real favors exporters a lot more, putting crushers in Brazil in a disadvantage. Plus, the biodiesel market in Brazil is weakened by the cut to mandates, while in the US the prospect is one of growth. So we do see upside potential for US exports. However, not all of the 10 million cut to production will migrate directly to the exports line of the balance. The effects of the failure in Argentine crop can already be seen in the US's crush pace so far in the crop and in the board crush as well. And on the biofuel space, the scenario has also more bullish factors for soybeans than it does for corn. While the ethanol market is still in pursuit of the 15 billion gallons in 2022, mandate for biodiesel was not cut retroactively by the EPA as it was for ethanol, and the mandate was actually increased for 2022, providing more support to demand. Okay, so how does all that tie down to the balance sheet? For soybeans, as we said, we believe that the current scenario provides strong support for US crush industry in relation to last cycle, but given the pace so far, this seems to already be appropriately accounted for in USDA's forecast, with only slight adjustments in our opinion. Exports, on the other hand, stand to gain from the cut to Brazilian production, still due after USDA February's report. On corn, we forecast only a slight adjustment down on feed and export demand, leading to slightly higher ending stocks. To finish it all, we have the world stocks and stocks to use ratio. To no one's surprise, the stocks to use is seen in the lowest level of the almost last 10 years. And especially for beans, this is likely to get even tighter in the next months as USDA adjusts, especially Brazilian production, closer to CONAB's numbers. Okay, so this wraps it up for soybeans and corn, and now we move to some remarks on wheat market. The focus on the wheat market is the Northern Hemisphere. The top producers are currently undergoing the dormancy period of their crops. The biggest year-on-year changes are forecasted for the US, which is currently recovering, which is expected to recover from the crop failure last year, and Russia, which is expected to reach record ripe production in 22-23. Back to wheat development and the phenology of the plant. During the winter, wheat market focuses mainly on two variables, temperatures and snow coverage. During this period, winter wheat goes into dormancy, resistance to cold. However, if temperatures drop too much, the plant could still suffer damage or even death, which is the infamous winter kill. Snow coverage can protect the plant, the crops from these cold spells, insulating the plants from the colder air temperatures. So far, a few events with potential for damage have happened during January in both US and Russia, but with reportedly low impacts. And currently in the US, snow coverage is not providing too much protection, especially in the hard red winter belt. But at the same time, winter risks are starting to fade as we move forward to higher temperatures. After the dormancy period, there is still a whole growing season ahead, so it does not stop there. And to this point, slowly but surely, the dryness is becoming the bigger threat to use than the winter. The whole west of the United States is already experiencing severe drought, and the predicted rainfall levels are not too high for the key months of the winter wheat growing season. The same is true for Russia, and in fact for the whole Black Sea region. Precipitation shortfalls are then expected for when winter crops start to leave dormancy, which could hurt the current prospects of good output that are being put out in these early forecasts. The next crop is still forecasted at a much more comfortable level than the current one, mainly on account of these good productions in US and Russia. But as we are still in the midst of the winter, production forecasts haven't changed much yet. However, currently we see these forecasts more as a ceiling rather than an average. And with dryness issues popping up, we might see trims to these early forecasts going forward. So in summary, we do expect the world stocks to get tighter as we move forward. And with that, we wrap it up with the fundamentals, and I'll pass to my friend Sol to tie all of these topics of supply and demand that we have discussed to the impacts to the market. Thanks, guys.
Hello, everybody. Now we are going to go through the impacts to the market of all the information that had been shared today. Let's see. It's interesting to highlight, along with the situation in Argentina and Brazil, the circumstances that is going through the soybean production in Paraguay. Okay, Paraguay is the fourth producer of soybean in the world, and this season has been going through a critical situation with a reduction of 60% of the crop. The seasonality was really critical for the development of the crop. The record temperatures and the extreme drop was during January, that it's a key month for the crop's development, and we are seeing now a cut of 60% of the forecast production that was about 10 million tons. So even considering the safrinha, that is a small crop, the small soybean crop that it's being seeded right now, we would be reaching 4 million tons and a half. This is as we said, a huge production. The situation of the crops were extreme this season. Not only that, after the cut in volume, 60% of the crop is what is bad quality. So they are lacking of grains, and they are lacking of quality, and they need extra bean to blend in order to be able to comply the forward sales. So this is a situation that is making a lot of noise in the market. The local prices are over Chicago because there is no beans, or there is no bean on qualities. And this is also important for Argentina, that, as we said, is the main exporter of soybean meal and soybean oil of the world. Argentina had an extra crushing capacity, and the total crushing capacity of Argentina is nearly 60 million tons, when the crop is going to be nearly 40 million, as we pointed out. And it has been always important, the opportunity that the soybean from Paraguay gives to Argentina due to the good quality, good seasonality, and the availability. Usually in February, March, Argentina start receiving these beans from Paraguay with high levels of proteins, with a very good seasonality for Argentina, because we can start the crushing of the new crop at an early pace, and was also important for the availability of this crop. In Argentina, we have macro situations that usually slow the farmers' selling due to the high inflation that has been chronic, or the spread between the exchange rates. So having this 6 extra million tons to crush from Paraguay has been a great opportunity for the Argentinian crushing industry. However, this season, with this extreme reduction in the production, this crop is not going to be enough for domestic crushing in Paraguay. So Argentina will be lacking these extra beans and will even export some beans to Paraguay due to this need of blending, of improving the quality this season. So this is going to be really extreme for the market. This is beans really extreme for the market. This is challenging the crushing pace in Argentina. I don't see we will be able to crush over 38 million tons this season. To point out how important this alternative origin is for the crushing industry in Argentina, in the last period with a big drop in Argentina that was 17-18, when 30% of the crop was lost, Argentina import 7 million tons from Paraguay, and this supply is not going to be available this season. Of course, this is affecting regional basis, and this is challenging, as I was saying, for the crushing pace in Argentina during the season. And regarding regional basis, it's important to see what happened in bases in Brazil. Brazil is so big that we sometimes say that they are like a lot of countries in one big country. But look at the spreads in the performance we are seeing in the bases, in the domestic basins. In the south of Brazil, specifically in the state of Paraná, we are seeing the bases at record high, out of the seasonality when in February, March, they start to weaken due to the pressures. We are not seeing that due to the extreme situation in the crop, and the some areas lost up to 50% of the production this season in Paraná. On the other hand, we have Mato Grosso. Yes, the Mato Grosso, there the performance was outstanding. They have record yields, record area, and record pace for harvest activity. It's almost done, and we can see the basis performance is regular, it's normal. We don't see, if we would only see the basis performance in Mato Grosso, we wouldn't say that Brazil is losing 20 million tons of crop. That's amazing. So we are seeing situations, but mainly regionally. If we translate that to China, of course, due to we are ending February, almost March, mainly north of Brazilian beans are the cheapest for getting into China, but the spread is not that impressive as it were in the last seasons. Okay, still Brazil is more competitive, but it is not as competitive as the previous years when the harvest pressure was so big, and Brazil was beating record crops and record crops. That is why we have been seeing recently China much more active buying soybean from United States. We are seeing almost daily announcements from the USDA with some sales. The numbers are small, conservative. We are not seeing China buying with anxiety. They are not nervous, but they are increasing the pace in the sources of American beans due to this high reduction in South American supply. On the other hand, we have the bull crash, super important this season due to the situation that was pointed out in Argentina, that we are going to have one of the lowest crushing volumes in this season in the last 10 years. This is due to the lack of volume, the local volume, and the lack and the situation we explained in Paraguay is very important as well for the local crushing pace. So having Argentina with a smaller volume to crush, this is going to be a smaller soybean meal and soybean oil to export. So it's going to be a great opportunity for United States, and it's going to be a good opportunity for Brazil as well to export soybean meal and soybean oil. It has been interesting how we have been seeing Brazil exporting a record pace bean oil to India in January, and how the pace of the loading of soybean meal has been increasing recently and would increase during the year. For United States, it's an opportunity because they had a good crop, almost record crop, and the bull crash peaked almost record levels during January, when the market was considering all this reduction in the crop in Argentina and the soybean meal increase that much, almost 30%. Now the bull crash is reaching kind of normal level, but they are still high, and we are seeing a bull crash keeping with very good performance all through the year due to the Argentine situation, with an oil share nearly 40% due to the power that recently gained the soybean meal due to the lack of production in Argentina, and as we have been seeing how many local governments have been more conservative in supporting biodiesel policies, with everybody now having the focus in controlling the big numbers in inflations in United States, Brazil, and globally. Again, the bull crash is good now. It's a almost record pace now, despite we are far away from the harvest, from the American harvest pressure. The bull crash is very good, and it's getting better. It's getting better during the season due to the inverse in the soybean markets. Again, we are expecting this to keep this performance all through the year, and it would support the idea of the USDA of record pace in crushing in the United States. So we see really this is unfeasible to reach over 60 million tons in for crushing in United States, and could be more. Good. On the other hand, going to corn, we are seeing inverse markets as well, but this is not that much due to the challenges that are going through the American crop right now, because it has been a very good crop and the stocks are kind of comfortable, but market is expecting a better South American crop for the second half of the season. Okay, so apart from the entrance of the new American crop by the end of the year, we are expecting by July, August, September. Brazil and Argentina gaining space in the export markets. This is very interesting to see in the local inverse prices, in the local calendar spreads. Look at Argentina, the spread between the April, that we can say that spot position, that is the first crop of corn, versus the second crop, that is July, it's record high, over $20. This is a lot in corn. Having a calendar spread of $25 is a lot. And this is due to this situation. The first crop, both in Argentina and in Brazil, were the one that had been much more affected by the drought. On the other hand, the second crop, yes, in Brazil, that is being seen right now, is expected to have better conditions, and we are expecting very good performance of the winter corn crop in Brazil. That is the one that is focused in the export markets. Okay, so this is important, interesting to highlight in the prices and the calendar spreads. I'm talking about spreads, but not calendar, but intermarket spreads. It's interesting to see the performance of the intermarket spreads in wheat. Recently, we saw how the Kansas wheat gained space between Chicago. We could say that would be the logical normal ratio, having Kansas over Chicago, but you know, in the last 2 years, over the much more comfortable stocks in the hard winter, and the performance and the flow of the money coming into Chicago, where the funds much more active there. So we have seen in the last 2 seasons Chicago being quite over Kansas recently, and we consider this is going to stay this way due to the reduction in the spring wheat that is high quality. That was an opportunity for the hard winter in United States. That is good quality as well. And apart from that, it's important to point out that the winter crop, it's in dormancy. Only 44% of the crop was in good, excellent conditions by the end of November, when we saw the last crop conditions report. And we have been going through a very extreme dry conditions in the Great Plains in United States. So market is quite anxious about seeing, I am anxious about seeing the crop conditions in April, by the beginning of April, after the snow melt, considering that now we can see that over 60% of the winter crop is suffering from dryness, to see how these rates are going on during the spring. As we said, the stock had been being reduced, and the situation is not that comfortable in United States as the previous year, to have a bad winter season. And speaking about wheat, winter, and main exporters, of course, the main subject all around is the crisis, the geopolitical crisis in the Black Sea. This increased volatility in wheat in all the markets, Kansas, Chicago, and Minneapolis, to record levels for this seasonality. We are much We are over 35%. That is not, is extreme for this time of the year, when we have no weather markets for wheat. So we are seeing very good alternative for developing structures with options, selling this volatility for consumers, structures for July, for September, even for December. The market is quite flat, but the volatility is very interesting to grab. And considering all these uncertainties regarding weather and regarding geopolitical issues, it will be good to take advantage of the volatility and develop consumer structures for consumer needs in the middle of the year. Okay, let's go to the conclusions. So, okay, in February, we are still considering how important is going to be the reductions in the South American crops for soybean and crops. In my opinion, much of this has been already priced. We are seeing the prices reaching some levels of resistance. The market is feeling that's getting overbought, that those prices are too much, that all the crop failure in Argentina and Brazil and Paraguay has been already priced. And on the other hand, we are seeing some support from the import demand in China, as we saw recovery in the pork production. But we are seeing the quantity, but we are not seeing the quality in the pace, okay? We are not seeing China buying with that anxiety, okay? The margins are bad for converting vegetable proteins into animal proteins. So that is the situation so far. USDA already cut China imports in the last report, and we could still see some couple of million tons to cut there due to the pace we have seen in the first half of the year. Regarding wheat, I think the preliminary numbers for Russia and United States are overestimated. We still need to see how the spring goes, and the geopolitical tensions are still a frame for these markets. On the other hand, we start in March. The market will be focusing on the planting intentions in the US, and of course, this weather market is going to be much more challenging due to the reduction in South America. It's not the same starting the season with strong backup from Brazil than the current situation nowadays. That, of course, makes the development of the American crop much more challenging. To finish, we have the frame of the macro situation and what happened in the FX war. We are expecting an acceleration in the economic growth in China, a better pace of activity. This is supporting for commodities, but in my opinion, this is going to have an effect in the middle term, not right now. And on the other hand, we are going through this year with a much more restrictive politics, monetary politics in the Fed, in the Central Bank of Europe. We are even seeing that in Brazil, in emerging markets as well. And this situation of inflation at also risky scenario for BRL, that it's critical for the pace of exports during the second half of the year, when the Brazilian elections are going to take place. So the exports are going to be affected by the BRL development as well. So thank you very much. We are open for questions. I'm very glad to have shared this time with you. Thank you.
Hello, everybody. Thanks for the presentation. So, guys, we hope you have found the what we have presented so far interesting, and we are happy to answer your questions if you have time for those. Okay, so let's start out with one that we have here. We have already gone through a critical week in the Black Sea crisis, and Russia invaded Ukraine, and the markets responded by adding uncertainty and volatility to pricing. Do you think this still would be a good time for developing consumer structures? Okay, so I'll pass that for Sol to answer, but I think this is a very interesting question. Because, sorry guys, I'm seeing that my camera is not working. I apologize for that. But let's move on. So, as HR said earlier this week, this is something that we don't have there's no way around it. Ukraine and Russia, Black Sea is the big topic of the moment. And first of all, our thoughts for those who are suffering in this conflict. Just as we were finishing this presentation, back last week, Russia was allegedly removing troops from the region, and this has changed recently, with Russia recognizing separatist regions. I don't want to pretend I'm a specialist in geopolitics. I'm a specialist on the subject, but I think we have two issues two questions that remain to be answered thus far. One is to which extent Russia will stretch its military actions, and if it remains on the regions that it has declared independent from Ukraine, or if it go further west into regions that are more intensive in wheat and corn production, and Odessa, which is the main grain port. And it has so far, the conflict has so far affected these areas. We don't know if it will continue. It is all in the heat of the moment, but it will, if this remains, it will further threaten the wheat and corn flow from Ukraine and also from Russia, since it adds risk premium to go into the Black Sea, and to which extent the Western countries will be involved. Will there be further sanctions? This word has been thrown out a lot. So these are all questions that remain to be answered. This is something that has happened overnight. But honestly, what I like the most about the question that we have received is that it focuses not on what is going to happen, which apart from a handful of people and the top leaders of the main countries involved, I think no one else knows, but rather how we can protect us, how you in the consumers of commodities, producers of commodities can protect themselves from whatever happens to prices. And this is exactly what Hedge Point is here for. So I said I was best to Sol to answer, and I spoke a lot. So please take.
Thank you, Pedro. Yes, prices are record high. We have seen today almost a full session with attached to limit up. Mainly, it's critical, the situation for wheat. We know that the Black Sea area stands for mainly 40%, 30-40% of the exports, depending on the year. We were expecting a big crop from Russia this season, over 85 million tons. This geopolitical situation is changing everything and adding a lot of uncertainties regarding the products availability, regarding logistics, regarding the trade flow, regarding the financial flow. So markets getting nervous, and the volatility is super high. We haven't seen today in the spot positions volatility over 45%. So this is high volatility, and I always, when I always speak about volatility, I say, what is volatility? It's an opportunity or it's a threat? It can be an opportunity as well, and we are seeing a very good range for trading with option, for trading with structures, and we are adding to the geopolitical uncertainty that it's big, as was explained. Also, the weather conditions that still we are seeing dryness in United States. USDA today pointed out an increase in the production for the coming season. You said we were expecting an increase of 25% in the stocks, and of course today in the balance sheets of the USDA, they are not changing the export sales. They are considering a normal flow, a normal weather, normal flow, normal geopolitical war for the export sales, for considering the projections in the export sales in the United States. So yes, I think it's a super good opportunity for developing consumer structures despite the record high levels.
Thanks, Sol. I think we have another one right here. What are your thoughts on this week's USDA Outlook Forum? Sol.
Well, I was anticipating something like that. I think the balance sheets are quite comfortable. We are seeing still stocks in soybeans under 10 million tons. This is not comfortable, but we are seeing some recovery in corn, some recovery in wheat. But this is important to point out that we are not still seeing the consequences of these big conflicts in the export space in the United States. United States has been using the protectionism in the wheat market. Black Sea was in the spotlights in the exports to Egypt. It was always a good availability, good logistic, the cheapest and good quality wheat of the world, and we are starting a season with a lot of doubts from that. So I think today the numbers were really preliminary. No surprises in the planting intentions, were the same as the baseline, the same in the quite similar to last season. And for me, that makes sense. Because good prices, we are keeping good planting intentions, good area. Same situation we had last year. Okay, the cost of this supplies are not the same, but still the opportunity in an inflation scenario, as we say when we speak about when we spoke about macro, it's good to be kind of being long commodities, of course.
Yeah, for sure, and they actually accentuated this that you mentioned, that we mentioned, sorry, in the earlier in the presentation with soybeans increasing, they increased corn as well. So very interesting, guys. I think this is all the questions that we have time for. I appreciate you all coming to our webinar. For those who will be staying for the next session, I'll see you there. There will be a QR code in the screen for those who didn't get their questions answered and want to send it to us. Thank you very much. Bye, everyone.
Thank you for joining us, and we're looking for your extra questions. Sorry we ran out of time. Thank you. Bye.